Good evening. What's your highlight of the week? Thank you for joining us again tonight. This is MIT Capitals. MIT stands for Mindset into Transformation. I'm Benjamin Huang, your host tonight. Here we have conversation with people who have done extraordinary things in their lives. We discuss their story of success and the mindset drive them into achieving the impossible. Today we have a very special guest joining us, Adam Penn, the managing partner of Bidwell Capital, right?
Yep.
Bidwell Capitals. Adam is a real estate syndicator and real estate investor. Let's dive in and listen to Adam's great story and the lesson he wants to share with us today. Adam, thanks for coming to our show. How are you today?
I'm doing well. Thank you very much for having me.
Thank you, Adam. Um, there's a lot of things going on, especially on your syndications journey. I was very happy to met you a few months ago, and there I learned the great stuff that you've been working on. Do you want to give a quick background to our audience on what you have done and how what's your pre syndicators world life look like and how you come into the syndications space?
Yeah, definitely. I went to college to be a software engineer. I actually find quite a large number of people that are in this space came from an engineering background, but I was a software engineer for about 5 years, um, and I just was acquiring property, and I was running them as short-term rentals. But I realized at some point, you just can't keep you run out of money at some point, right? You get Fannie and Freddie'd out, or you run out of your own capital, and then you have friends and family that are asking, "Hey, how do we get involved in this?" And so to be able to learn about syndications and be able to raise money through a larger group of people, you provide more diversification across, an investment, right? Because you're not buying one house, you could buy 10 or 20 at a time. Um, and then you can share that return with your group of investors that you're bringing together. I got started um, listening to the real estate guys and taking some of their syndication courses, and then building up my network of investors. And the first syndication I did was in oil and gas, actually, because
Mm,
one thing that I'm really focused on is being able to alleviate tax problems, right? So if you're a high W-2
right.
earner, or even if you're, a real estate investor, you just make too much money and you don't know, how to how to offset that tax income. We look for investments that can do that. And so oil and gas is probably one of the biggest ones in that space. And so we found a partner that we were able to work with, where we could purchase working interest in oil wells, which lets you offset. I'm not a CPA, I can't provide tax advice, but it lets you offset um, active income. So if you're a W-2 earner, I'll speak from my own experience. When I was a W-2 earner, if you make this type of investment, you can actually reduce your taxable income, which really boosts the performance of that investment because you get the taxable income back, plus you get the return on the investment.
Hmm. Right, right. So basically, both gas and oil and real estate are extremely big on tax benefit.
Yeah,
Right.
yeah. It's
Sounds good.
finding those things that the
Yeah.
government lays out in the tax code that they tell you. If you read the tax code, they tell you exactly what they want you to invest in, right? Because those things are the ones that come with the largest tax deductions.
Those are
Hmm.
playbooks,
Yeah.
basically. The tax law is text playbook. Very cool. So, Adam, before we jump into your first syndications, I recognize that, right, from being a W 2 earner into, active on either investing or, actively playing the role of, seeking tax benefit or those investment opportunities, there got to be some sort of mindset shift or change, right? I mean, walk us through that process.
Yeah, so I think the biggest thing is and Robert Kiyosaki talks about this a lot, but you've got to think how the rich kind of think, right? So you don't want to be trading time for dollars, right? If you go to work and you get a paycheck, well, if you don't show up, you're not getting a paycheck. So you want to really think about, well, where do I want to be in 5 or 10 years, and what do I need to do to position myself in a way that I don't need to be trading my time for dollars, right? And especially when you get started, I think in the beginning you're going to be trading more time for dollars, right? You're going to be putting a lot more time in up front. You're going to be, really working. A lot of people start doing, they do their W-2 and this other thing all at the same time, and that's a lot to do. But if you've got to think that kind of the goal you're going to get to, right? And if your goal is that you are able to just have passive income or that mailbox money, um, you've got to kind of, in my mind, I always look at what my goal is. And so a few years down the line, where do I want to be? And then what do I need to do today to be there?
Cool, very cool. You want to share with us what you want to be, like your personal goal,
Yeah, I
short term,
mean,
long term?
I don't think I have a number tied to it exactly. I have a number written down somewhere, but I just want to be in a place where I can do what I want. I want to be able to provide good investments for my network, and I want to be able to provide. I don't have a family yet, but eventually I would like to, build a family, and I would like to be able to just be in a place where I can spend time with that family and not have to, oh, I've got to go to the office today, right?
Very cool. So essentially, the
Yep,
freedoms.
yeah,
That's what
definitely
I'm hearing.
financial freedom and um, just kind of having the ability to do what you want when you want to.
Right. Sounds good. How long have you been doing, like the work other than your W-2? Like how long has it been since the shift
Yeah, so I
of
mean,
your
I've been
mindset?
doing real estate for about 6 years now, or about 5 or 6 years, and I've been doing actually about 6 or 7 years, and I've been doing uh, syndication for about a year and a half now. Uh, we had businesses before where we had partners, right? So it'd be me and a partner, we'd buy a house together. But now we're doing it where we've got 10 and 20 investors into a fund. We can purchase a set of, an asset and split that up amongst all of us. And we can get a better asset, a little more diversified, and we all have the same amount of money and has had we just bought one house. But now if you look at property and you have a 10% vacancy rate, well, really on one property is either going to be a 0% or 100% vacancy, right? But if you can buy a set of property, then
Yeah.
you can get
Mm-hmm.
that 10%. Yeah, right.
It's a number. Very cool. Yeah. I mean, this is the same idea as,
Hmm.
from single family to multi. Right? When we get into multi, it's really just the number,
Yeah,
right?
yeah, definitely. And
Very
that's
cool.
something that we
Uh,
want to focus on, right? Is being able to um, group sets of properties together, right? So sets of single families, because I still love the 30-year debt you can get on them. I love the amount of people you can sell it to, right? There's lots of exit strategies. I know you do multifamily, but if you want someone to buy your apartment building, you need another investor, right? But if I want to sell a single family
yeah.
house, I could sell it to another investor. I could sell it to someone who wants to live in it, someone who wants to rent it, an institutional investor, right? There's a lot of options for exit strategies.
Right. You have, yeah, yeah, exactly. You can potentially pack them up all
Hmm.
together, or you can break it down, and right. Very good. Yeah. So when let's talk about your
Hmm.
first syndication, right? On the gas and oil projects. Give us ideas on what that looked like, and what was the challenge, and what
Yeah,
the
so I
number looked
mean,
like.
whenever you start raising money, the hardest thing is that really getting people to write the check, right? People can tell you all day, "Hey, yeah, I love what you're doing. I'd be very interested." But when it comes time to, "Hey, do you actually want to invest?" They've got to be willing to commit. And so we work really hard with our list and our set of investors to make sure what they want, what we are offering is what they want and what they need, really,
Mhm.
more importantly. And so we have on our first deal, we were amazed how easy it was to raise money, right? We had $2 million overnight. Well, none of those people actually invested. So, you have to turn back around when that, like they said, at that point when you go to actually ask for the wire, or to to sign the documents and send a wire transfer.
Mhm.
Um, there's a lot of work before that step, right? You got to nurture that relationship and be able to kind of get them to the point where they know that's what they want, right? And it's not a hard sell. It's just it's a conversation and making sure that it's meeting their need. And if you meet their need and you work through this process, then
Right.
they normally move forward. But it was definitely a learning experience in the beginning of, how do we go about raising capital, and how do we expand our
Yeah,
network?
that's a very interesting part. In terms of the capital raising portion, maybe let's dive in a little more. When you were doing your first deals, did you start off pulling up the investor list with the connection that you already have, or right? How's the process?
Yeah, so
Mhm.
Yeah, so we went to so it's me and a business partner that really worked together at the two founding members of Bidwell Capital, which is our syndication company, and it's me and my business partner Phil. We went through our list of friends, family, people we went to college with, guys that coworkers, people we knew that would match the investments that we had, and then just tried to figure out where they are and what they are looking for, right? Is are they interested in an investment like this and a partnership with us on that investment?
Mhm.
And then beyond that, you have to start asking for referrals. That's really the best way. For as far as, amount of feelers put out versus the number of investors we got back, referrals is the best way, right? If you know someone and they know that you do a good job and they make a referral, right? That's a lot easier than going and, cold calling someone, or, I meet a lot of people at, just like I met you the other day in Jacksonville at an event. Um, you meet people at events all the time, but then going from that, "Hey, we just met," to, "Do you wanna invest in our deal," is a process,
Mhm.
both from a legal standpoint and from, a trust standpoint, 'cause, this entire
Exactly.
business really operates on trust.
Yeah, I mean, no matter how legal you are, or like no matter how strong the event that you guys were able to meet, really down to the bottom is trust, right?
Mhm.
Whether we trust you enough to give you the money, that's the deal,
Yeah,
right?
not only do there's different levels of trust. There's, right, do I trust you as a person? Do I trust this deal? And also, do I trust that if something goes wrong, you'll be able to figure it out, right? Because something always goes wrong, right? So you
Exactly.
got to have an operator that really knows how to work in that asset class, right? And like I said, on the oil and gas stuff we did, we partnered with a great operator. And then on short-term rentals, right? That's something I've done for 6 years. So when we end up doing a short-term rental fund in the future, that's going to be something that I have experience with. I have experience with dealing with guests and what happens when stuff gets stolen or the cleaners don't show up, right? There's all these little aspects that if you partner with someone that doesn't understand the space, right? That
Hmm.
that's you're not going there things could come up and it could be problematic.
Right, exactly. Different asset class would have their own issues
Mhm.
and also their own challenges, right?
Yeah.
So the know-how is truly something need to be equipped at before we get into the space.
Yeah, definitely. I mean, and that's a big thing is, most people could go out and buy a single family rental property, but I'm sure you're familiar with this being in the multifamily space, but you can't just go out and buy an apartment building, right? You got to have experience or
No, it's
partner with someone that has experience.
exactly. And to be honest, your biggest partner is the lender, right? It's the bank, right? So your biggest partner won't let you buy, things that size if you have no idea or nobody in your team has that
Yeah.
expertise. Right, exactly. Cool. Edens, you were saying that the investor list initially you have like 2 million, equity that you think you can raise, and how much equity that actually went into or actually take the
Yeah.
action,
So
get
it was
wired.
200,000 is that what we got off of that first, $2 million of soft commit, and then we got $200,000 of people that actually wrote a check. Um,
It's
yeah,
like
it's
10%.
10%, right? And then,
Wow.
and so we learned real fast on, what is a soft commit and how do we make those a little more reliable, right? Because if we're going out and thinking that we need to buy a building or buy another percent working interest in an oil well, we need to know what we're actually able to raise. And so
Right.
And we're still in the learning phases, right? I think we're always going to be in the learning phases. Everyone's different, and there's always something new to learn. But spending some time, more time, I guess, is what I'm trying to say, with the investors and really learning more about what they need, so that when we offer this solution, it's an exact match, right? You're not trying to sell your product, you're trying to match your product with a need.
Exactly. Exactly. But don't you need to you know communicate with your potential investor on why this is an asset class makes sense, right? Because it's you should, I mean, it should not always be whatever the investor need. You fulfill that, right? In case this is a bad asset class, or that's asset class you
Yeah,
see
and
is going
so,
down.
we have monthly newsletters that we do. We have um, updates that we do through our funds that are active. And so, we kind of provide information about what we do, and that lets people reach out to us a little bit. And at the same time, when we're doing our onboarding calls with new prospective investors, we're asking about what they've invested in the past and what their needs are, what their income levels are, so that it's a personal conversation, and it lets you really kind of see what they could need, right? And so you can explain, hey, these are the things that
Hmm.
are the benefits of our investments, and then kind of let them walk themselves to the solution, right? If you have, if you know that you pay a ton in taxes, and I'm talking to you about all these benefits tax wise that our investment has, then you can go ahead and kind of say, oh, wow, that might be something that interests me.
I see. I see. So basically, you start off the conversations and lay out the potential benefit and let them convince
Yeah,
themselves
right.
eventually.
You want it to be a decision they make, right? At the end of the day, you don't want to do a hard
Yeah,
sale, and you
exactly.
don't want to force someone into anything, right? So you want to have a
Hmm.
conversation with them and just show them what's out there, right? Because a lot of people fall in this trap of paying high taxes, or being stuck in the stock market, making no returns or losing money, just because that's the general consensus of how you make an investment or what you need to do. And so if you can provide this education that shows them there's these other options out there, they're a lot more willing to move in that direction.
I see. I see. So, for multifamily syndication, usually it would have about like 2 weeks to 3 weeks. Sometimes you get a month of time to raise the money. How about the syndication that you did for the gas oil? Does it like what's the time frame that you start calling for
So it's
capitals
normally between a
and
month and two
like the
that we
process?
have, and it's gonna vary a little bit based
Okay.
off of how much we're looking to raise, right? And then how much, because we're not buying 100% working interest. So how much are we looking to raise, and then how much is the company that we're working with? How much have they raised, right? Because if they, it's not a co-syndication, but we're investing in their deal, and so we kind of upfront tell them, hey, we think we can raise this much. And then if they fill up, and we're at this amount, they'll probably just finish filling it, so we can lower our amount a little bit. Now, last time we
Mm,
were able to bring it all the way up to where we wanted to be, but it's a little more flexible than if you went out and bought a building. And then from the single family standpoint, what we're looking at doing is buying small sets of property at a time, right? We'll raise money, and as we start to raise money, if we get enough to buy four houses, we'll buy four houses, and we'll continue down the path, more of like a fund style. We have a criteria, and you can buy some, raise some money, buy some more, raise some money, buy some more, until you hit whatever your outlined criteria was to close the fund.
I see. I see. So you
Hmm.
can set a time frame for the fund, and throughout the process, when the fund's still
Yeah.
open, you can keep buying
Yeah.
individually. I see. I see. I see. So the closing for the certain property would not be the
I'm
closing of the
sorry, say that again.
syndication. So the closing for
Yeah.
one of the
No,
properties
right,
will not
because
be the same.
especially, and we
Okay.
haven't done a syndication on the single family, but this is just kind of what we're modeling. The you don't want to go in, for a multifamily, you're going to go in and you're going to get a LOI and get it under contract and then start raising, but you wouldn't want to do that on a single family residence when Sam from down the street is trying to sell his property, and now you're going to lock it up until you go
Mm,
raise some money. So the goal is to be able to have the cash in the bank so that we can purchase the
I
property
see.
um, after we've raised the funds. But we outline all the criteria up front. That's what we've
Right.
talked to our network about a little bit, and what we've talked to attorneys about should we want to do something like this in the
I see.
future.
Do you think the same thing can get applied to multifamily? Well, I mean, right. I know you don't do much multi, but do you know the same structure can be applied to like multi? So say you start fundraising and until the deal show up, you can use the cash to buy it. Is that some?
Yeah, I'm not an attorney, but I do believe the similar idea would work. I think they're normally considered blind funds to a certain
Oh,
extent,
I see.
right? So you'd have a you'd have a fund, and maybe there's some criteria, and you're outlining to your investors what you're trying to buy, but you're not going to have the thing under contract, and you don't have to have your investors' approval on every property that you're
Got
going
it,
to
got
buy.
it. And of course, those information will need to be laid out upfront.
Yeah, yeah, right. You just as long as my understanding from the attorneys I've spoken to is as long as that's disclosed, you can do
Sounds
it.
good.
So
Yeah,
yeah,
and if you're listening to this, right? I mean, if you need details, and make sure you check with your attorney, right? I mean, we're just chit chat here, right? Just trying to understand how people are doing things, but ultimately, right? You like go with your attorney because whatever your attorney say is the way that you should operate, right?
yeah, yeah. And it's super important to find an attorney that you can work with, right? Because if you find someone that just hands you a set of documents and then says, "Okay, have fun," that's a lot different than having an attorney that every step of the way you can go back and ask a question or figure out, "Hey, is this the right way to do something?" Or, "Hey, I want to send out this letter to our investors or prospective investors. Is this
Mm-hmm.
okay? Right? Is this violating any SEC regulations?" So there's more regulations out there than I would ever care to, learn every little piece of, right? That's not my job. We hire attorneys and experts to do a lot of that.
Exactly.
So, to really have that good counsel.
Exactly. Adam, we all know that in syndications, capital is one thing. The other thing is deal, right? Let's talk
Mhm.
a little about the deals. How did you find deals, and what would be the philosophy that you have when you're screening deals?
Yeah. So for me, I want to operate in a space that I'm familiar with or with a team that I have a lot of trust in, right? So to me, the biggest part is having a good team. You could have the best deal in the best market, but if you don't have a team to execute it, it's just like having a bad property manager at your property, right? You could have a beautiful property and beautiful tenants, but if the property manager doesn't collect their rent and doesn't tell you when the garden hose spigot is broken and that floods everything, right? You're not going to have a successful business.
Exactly.
So for me, I really look at the team. I look at a team that's trustworthy. I look at a team that understands what our mission is and what we're trying to do. And then from there, well, first I look at a market. In that market, I try to build a team. But from there, I go and find deals in that market that make sense to me, right? So, you know, for instance, I have some property that I personally own in Memphis. And so I went out there and bought some property, and we're working to build a team, right? I had a team at first, but that team wasn't wonderful. So now we're building up a better team should we want to bring investors out there in the future.
Got it. So team ultimately deterred what kind of deals that you will be looking for.
Yeah, well, I think it's a lot. It's hard to get a team. It's hard to get a deal without a good team, right? So I
Right.
use the team to really be able to bolster my deal and make sure that it's good and to make sure that we're gonna be able to execute our plan.
Right. Fair enough. Good. Let's talk about the interest that we recently talked about on your short term rental, right? You do have some interest in that space. What are you looking for? What's your vision?
Yeah, so I mean, I have short-term rentals. I have some in Northern California. I've got that building in Memphis I just spoke about. Um, My vision is to be able to provide. So what we do is I call them kind of blue collar rentals, right? So it's not luxury beachfront vacation properties. It's um, contractors and nurses and families visiting kids at college, right? So I want to have sets of those. Our cash flow's good. They're recession resistant because contractors and nurses still travel, and even during COVID, we had good returns on all of our rental properties, even those non-vacation style ones. So my vision for that is to be able to build a fund similar to that in the future, where we can bring investors into those. Because, like I said, we have partners on a few of them in the Northern California area, but I think it's a very good asset class, and truly to me, it's backed by real estate, which is why I'm so interested in it. Right, you get that 30-year debt, you get an asset that is very maneuverable. Right, you can rent it long term, you can short term rent it, you could do midterm stays. Right,
Hmm.
you could sell it to a family, sell it to an investor. It's just a very diverse asset class, and it's a good
Cool, cool.
inflation hedge.
Yeah, exactly. Well, I mean, 30-year debt is the inflation hedge, right?
Yes, yes.
Very cool, very cool. Um, Aaron, I think we like for almost every single guest that comes to our show, we go with those common questions, because we believe that people who have done great things, they got to have some you know either personal like philosophy, or the special ways that drive them go through the challenges, right? So give us some do's and don'ts, like considering throughout your entrepreneur journey, like what are the do's and what are the don'ts.
Yeah, so to me, I think the biggest thing is just start moving, right? Like you're not going to get anywhere if you don't start. So, you know, me and you could talk all day long about all these great things we want to do and all these plans we have, but if you don't put those plans into action and actually start making progress, you're not going to get there, right? And there's going to be times that you fail and there's going to be hard times, but just keep moving forward and you will get where you're going. Um,
Good, good.
yeah, I think that's just the biggest thing for me. I'm quick to fail, right? I'd prefer to fail real fast than learn 2 years from now that I failed at something, right? Just
Right,
keep
exactly.
pressing forward.
Exactly, just like what we have learned from the real estate guy, right? Take the precision imperfect action.
Yeah, yeah, definitely.
Very nice. The other question that we have um, is there a recommended books or any resource that you regularly consume your either energy from, or knowledge, or things like that? Like, what would be your top one recommended thing?
I always listen to people that whenever they say, "Hey, there's this book I read," I don't necessarily go out and buy it instantly, but I research it a little bit and I see if that's a book that I think would be really helpful. Um, there's a book called by Chris Voss called "Never Split the Difference," and it's a negotiating book. I think that's a very good book on negotiating, and I think that it has a lot of valuable impact. He speaks about he was a hostage negotiator for the FBI, and he speaks about if me and you are arguing about price, you can you can decide, hey, we're going to meet in the middle. But if he's negotiating for someone's life, there's no really meeting in the middle, right? So never split the difference.
Hmm.
I thought that was a very good book. It's probably one of my more recent reads.
Sounds good. Sounds good. Great stuff. Let me see. And Adam, we would also love to promote our guests. Is there any social medias or any like how can people find you?
Yeah, so people can go to bidwellcapitalfund.com, and that's our business website. If that's too hard to find, it's just adampenn.com can also take you there. Um, and then we're on LinkedIn. But yeah, that's probably the best way to find me would be bidwellcapitalfund.com. And then through there, you can sign up for a newsletter too if you're interested.